oil and gas stocks, the Oil Ministry is preparing the groundwork for the mega merger of public sector oil companies. Sources tell CNBC TV 18 that one proposal is for upstream giant ONGC to acquire retail major HPCL for 44,000 crores. That's again 51% government stake and the 26% open offer that will be mandated, of course. Secy Tripathi, former oil secretary, and Narendra Taneja, energy expert, and also the national convener of the energy cell of Bharatiya Janata Party, now join us. Good morning, gentlemen. Mr. Tripathi, first to you. The devil's argument would be that why merge an upstream and downstream companies? Because in that case, you are not giving shareholders the freedom to go with one part of the business. You may want to go with upstream at good times when crude prices are rising, and you may want to go with downstream, say for example, over the last 3 or 4 years. Your thoughts on that?
Well, I cannot really talk much about the shareholders, but I can talk about the general economic benefits that are likely to accrue. And I assume that over a period of time, then the shareholders will also be able to benefit from there. To me, there are 4 reasons. And in fact, in 2004, when I used to work in the Ministry of Petroleum and Natural Gas, we had mooted this idea for the first time. The reasons to my mind are, number 1, upstream and downstream integration avoids many intermediate steps and brings cost efficiencies. Number 2, this is a highly volatile sector. Both availability and prices keep fluctuating. And you have seen in the last 10-12 years, the government had to intervene many times to take money from one and give to the other. So if they are integrated, as they are in many countries, then many of the shocks can be absorbed internally, and government intervention, if necessary for bringing price stability and things like that, would have to be much less. Number 3, this is a sector which is very capital intensive, high risk and high technology. There has to be a size to go forward. I would say that, Oil India is the oldest company among all of them, but it hasn't gone beyond a certain stage because it lacks the size. And lastly, all over the world, it's a global sector. All over the world, you see the competition is with very large companies, whether from West, they are some of the largest companies in the world, ExxonMobil, Shell, BP, or even the state companies, whether it is Rosneft, Gazprom, or Middle East companies like Aramco, ADNOC, National Iranian Oil Companies, or even take Chinese, the CNPC or Sinopec, etc. They are all very large, much larger than our companies, and therefore they are able to dominate the market, get better terms, access the oil resources much better, in much better way than we do, are able to take the risk, and also to that extent bring about energy security in their country.
Okay, well, we'll come back. We'll revisit that argument, Mr. Tripathi. Mr. Taneja, good morning to you. Would you be?
Good morning.
Would you have any guesses on how this will happen? Will it be that ONGC will be a holding company, or will it be that there will be a share swap? They will be merged into one entity. Any views on what might happen and what ought to happen?
Well, good question. I think my sense is the strategy or the thinking of the government at this stage is focused only on one thing, that how can they help ONGC acquire more strength in terms of balance sheet and muscles in terms of, sitting across the table and negotiate better deals overseas, acquiring, exploration production assets. Because our dependence on import is growing very much, and at the same time, the only company we have is state-owned company is ONGC. So the government wants to strengthen ONGC. One idea was, of course, which was floated initially, was to merge all companies, under one, and then create a kind of super giant, state-owned super giant in India. I personally was against it. I don't think that was a very good idea, because each of these companies got its own DNA, history, and all that. That wouldn't have been a very smart idea. But I think this is a limited agenda. This is a limited kind of a scope, and therefore I think it's going to work very well. In terms of whether HPCL would cease to have its own identity and so on and so forth, I personally feel that ONGC may own it, and its balance sheet is fully integrated. But HPCL is on history. It used to be SO, as we all know. I think it should be allowed to maintain its own identity. But the final decision on that, to the best of my knowledge, has not yet been taken. Idea is basically to strengthen ONGC and help ONGC to the extent possible, because we have seen, as Mr. Tripathi also pointed out, when ONGC goes overseas with a very limited size, rather small size compared to CNPCs of the world, even Petronas of the world and Saudi Aramco of the world, so on, they find it very difficult to compete. But this would basically help ONGC to become $100 plus company, $100 billion plus company, and that would help ONGC to acquire the kind of strength it needs. Because in time to come, our dependence on import is growing, and we will need to go abroad even more aggressively, acquire oil and gas assets. As the second trend we have seen is that, like Rosneft, big producer of oil in Russia, buying into SR Oil. Why did they buy into SR Oil? Simply to secure demand for their oil. The same can go for ONGC also, so that, you know, ONGC upstream side is better, kind of more secure, and in time of crisis that they are likely to come in maybe a couple of years from now, the ONGC is better protected. And at the same time, HPCL. Pressure from renewable is growing. You know, international sentiments against fossil fuels are growing very hard. So in the time to come, these companies have to come closer, whether upstream and downstream, and where the government can facilitate, government should be facilitating, especially large economies like India, and therefore see that how these companies can basically be put on a better pedestal so that they can go overseas, compete, at the same time protect their both upstream and downstream interest. To me, it seems that seems to be thinking of the government, and also that seems to be the strategy. And another question is that how the whole thing is executed and how it is basically taken by the consumers as well as the investor. So this is going to be also a little bit of challenging part of the whole exercise. But my own sense is the government is determined, government is keen to do it.
Sure.
At the end of the day, I think it should work out well.
Mr. Taneja, good morning. Of course, you know, there will be employee issues as well. These are some of the largest, employers that we have right now. Do you think that would be a bit of an issue? Because, you know, now we're talking about creating three companies, ONGC with HPCL and BPCL, IOC with Oil India, and maybe, you know, GAIL heading a gas company. Your sense of whether that could create a bit of an issue?
A very good question. I think probably the most important question, because as I said, HPCL is on DNA. Used to be SO. BPCL is a very distinct DNA. It used to be Shell, as we all know. Indian Oil and has very different. ONGC has a completely, different and distinct DNA. So therefore, I think it's important. HPCL, in my view, is HPCL should be allowed to maintain its identity, though its balance sheet and other things are completely merged with ONGC. But it can have its own identity. And therefore, it is important, for instance, that Indian Oil, and if they plan to have some kind of integration there, and eventually India going for, let's say, two integrated oil giants controlled by the government of India, I think that's not a bad idea. But what is important to keep in mind that these companies have very distinct way of looking at themselves, also very different way of looking at their own business. ONGC has a very different mindset, very different culture, even from Indian Oil. And I think that should be kept in mind. So otherwise, we might end up in a kind of situation that we still see in Air India and Indian Airlines. They're still struggling. Merger has happened, but the merger has not happened at the same time. So I think HPCL, my view, HPCL merged as far as the balance sheet is concerned. But ONGC may be the holding company of HPCL. But HPCL must be allowed to maintain its own identity.
Okay. Much will depend on how much synergies they're able to extract, isn't it, Mr. Tripathi? One big fear is that ONGC will be asked to pay cash to the government for that stake in HP and or BP. In which case, I mean, where is all this strength argument? It would be an over-leveraged company, the money would be gone, cash would be gone, and the government of India perhaps will have a lower deficit. What if that is the end result?
Well, that may be a short-term plan. Government of India's Finance Ministry may be thinking on those lines, but as Mr. Taneja has also pointed out, it will not be a one-shot merger. It cannot be, because these are all very large companies. They have their own DNA, they have their own culture, and that was the reason why the committee which was appointed in 2004 to look into this question with Mr. Krishnamurthy, Mr. Ramakrishnan, and Mr. G.K. Arora suggested that we should continue the status quo for some more time. So in fact, the ONGC and HPCL are being talked about because ONGC and HPCL are working together in MRPL. So they already have a working relationship. Similarly, Indian Oil and Oil India can come together because they have been working very close to each other, and in the northeast area, they are the only ones who are having presence there. So, the idea is that one should be strong in upstream and should also have downstream, which will be led by ONGC. And as has been pointed out, ONGC and Indian Oil cannot work together. They have very strong DNA. So, the others can be led by Indian Oil having Oil India in its ambit. But at operational level, they can continue to have their own identity. And over a period of time, the good thing is that all these companies have good personnel policies, and they all have been making profits. So, Air India, Indian Airlines, they were losing companies. In a loss-making companies, it becomes more difficult to adjust and accommodate. But in profit-making companies, it is not so difficult. It is difficult, and therefore, it will have to be 2-stage, 3-stage matter. Okay. BPCL, I would imagine BPCL and GAIL can be the third company. In fact, the reason why we could not go ahead in 2004-05 was that the minister at that point of time, he thought that all of them should become one. And going by the experience of Coal India, Steel Authority and others, I felt that that would not be feasible to have all of them come together and form one integrated large company. But if we go with 3 companies, I think it is possible, and let the 3 companies continue to work, and then over a period of time it can be seen whether their further integration is necessary or not.
Okay, gentlemen, we'll have to leave it at that because we have so little to work with in terms of what